Investing mistakes for beginners. What should you avoid before you start investing? What mistakes should you avoid as a beginner in investing? Mistake number 1 is not investing at all and letting your money sit on the bank. With inflation, your money is less worth in a couple of years than today. This means basically the prices of goods and services are rising and the buying power of your money is falling. Therefore, not investing at all is not an option. It is better to invest your money in a stock market or in real estate, for example, and let your money work for you. By doing so, your money would grow over time and it won't stay the same and lose the buying power. Mistake number 2 is investing the money you need for other expenses. Make sure you invest money that you don't need at the moment. You should let your money work for the next couple of years and you should be able to leave that money work for you and not pulling it out. Therefore, you should be able to cover your expenses like wash machine or some other expenses you need money for. The longer you are able to put your money work for you, the better, because you would profit from the compound interest formula. Mistake number 3 is panicking when the stock or your assets are going against you. The market has been very volatile in the recent months, and because of the corona cases we have seen huge swings, and therefore it is probably very hard for beginners to deal with those swings in the P&L. Instead of panicking when you see a down move or a move against you in your assets, you should try to pay attention to the bigger picture and don't get too attached to the charts on a daily basis. Especially when you're investing, on the long run you should be focused more on your assets over months or even years and not being attached minute by minute or day by day at the charts. Mistake number 4 is being too aggressive at the beginning. Another common mistake, what most of the beginners do when start investing, is that they start right away with too much capital and risk too much money without knowing anything about the markets. Especially if you are new, it's better to start slowly, test the waters first and see if that's for you, see how you deal with your emotions and learn as much as you can about the stock market. It is important to understand your reactions to the wins and losses you are making. When you start seeing yourself that you are comfortable, you can increase your size and start investing more. When you start too aggressive right at the beginning and when you're risking too much capital, you are just risking not only your capital, but you are risking also your emotional capital. This means you would get burned out right at the beginning and you would be not able to be calm and keep investing in the next months or years. Mistake number 5 is investing without knowing anything about the stock in which you are invested in. A lot of beginners start right away and put their hard money into the stock market without even understanding how everything works and without even knowing the basics of the stock market. Make sure you understand the basics before you start investing and start slowly. There is no rush to start investing right at the beginning. Take your time, the market is open every day and there would be always some great investing opportunities out there. Make sure you understand the stocks in which you are invested in. For example, take a look at the finances of the companies. Check out the 10K sheet on the sec.gov website. Make sure you understand if the company is profitable. Pay attention to some KPIs like earnings per shares, return on equities, and so on.
Let's take a look real quick on Yahoo Finance. This is a great website to start with when you are new. For example, you can type in here the ticker and the company which you are searching for. In our example, we can take Apple. So here you have different tabs and you can use them to see what is the current situation of the company. Under the summary tab, you have basically the whole information and you can see what is the open, what was the previous close, what was the 52-week range, and so on. Under chart, you can take a look at the chart if you don't have any other charting software. What I'm looking for normally is the tab Financial. Here you can see the income statement of the company, and you can have a fast overview of the total revenue, cost of revenue, gross profit, and some other KPIs which may be interesting to you. For example, net income over the past years, earnings per share over the past years, and so on. Another important information which I'm looking for is under the tab holders. When you click on this tab, you can basically see which are the major holders and which are the top institutional holders of the company. For example, we can see that Vanguard Group, BlackRock, and Berkshire Hathaway are the top 3 holders of this company. You can see also how many shares they own and what is the percentage. Of course, if you scroll down, you can also see the top mutual fund holders, and as we can see here, the top mutual fund holders are Vanguard, Vanguard 500 Index Fund, and S&P 500 ETF. This information would basically give you the idea that the stock is owned by some bigger institutions, and if you have some great financial statements, you can feel more comfortable by owning that stock. If you want to take a deep dive into the company, you can use some other websites like sec.gov. Under the sec.gov website, you can easily find the stock which you're looking for. In our example, let's take a look at the statements for Apple. We can click basically here Apple filings, and as we can see here, we have the 8K, 10K, and so on. So this is basically the current report and the quarterly report which the company is doing for this website. If we click on documents, we would see some more information, and if we click on the 10Q, we would get more information and more in-depth information about the company and the current situation of the financials and so on. Here we can see the consolidated statements of operations, net sales, cost of sales, and so on. Under this section, we are able to see the earnings per share. This is also an important KPI for our decision if we want to buy this stock and hold in our portfolio. You can go basically through that document and you can see a lot of information which could be useful for your decision of buying or owning this company as an investment over the long run. Another very useful website which you can use and which is also free is the finviz.com website. If you click on that website and on the tab screener, you would be able to filter some of the stocks based on what you're looking for your investment. As you can see here, you can filter the stocks for a particular market cap if you want a large cap stocks, or if you want small cap stocks, and so on. Very interesting to me is the tab fundamentals. Especially if you are investing in stocks, you should take a look at this section and filter in order to find some great companies out there. You can filter, for example, for companies which have earnings per share growth next year or earnings per share growth in the past years. Let's say you want only companies which have earnings per share growth for the past years over 15%. You can also choose earnings per share growth quarter to quarter, more than 5%. And as you can see here, the list is getting smaller than at the beginning. And then when you define what you're looking for, you can just go ahead and start looking through those charts and see what you like. You can do that by clicking here on the tab charts, and you would see easily your chart and the chart of the company. If this is an uptrending chart or not, this is getting more into detail, and if you want some more information about those technical analysis and charts, you can just visit my webpage sylviabelrock.com and see how I am analyzing some of my stocks. As you can see here, there are a lot of stocks out there which can be used for your portfolio and watch list, and you should narrow it down depending on what strategy are you looking for, what KPIs and what fundamentals KPIs are important for you. And last but not least, Don't freak out if a stock is going against you or if the ETFs which you are holding are going against you. This is basically the 10-year weekly chart of the Dow Jones, which represents the 30 US companies. As you can see here, the chart is in an uptrend, and those stocks which are included in the Dow Jones are mostly going up. This means that even if you have some small pullbacks, like for example in this area here or in this area here, or even with the coronavirus in this area here, all those stocks are rebounding and making their way higher and higher. Even if you see the coronavirus here, that was a great opportunity to start buying some stocks instead of waiting until the market recovers, because then you would be probably too late. So focus on the bigger picture, guys. Don't get freaked out by small pullbacks. Think of the bigger picture, like the chart, and the stocks are going up over the years, and this won't change overnight. So stay calm and don't get shaken out.
I am personally investing in growth stocks, and if you want to get my weekly watch list, which is free, check out my website sylviabellrock.com and subscribe. So that's it, guys. I hope that helped you a little bit to understand what common mistakes you should avoid as an investor beginner. Stay tuned and give me a like button if you like that video and subscribe to my channel.